please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Positive opening. Yes, okay, the positive opening just lost a little bit of steam. Now up only 4 points.
The reason we are going global is because there's such a big upside out of going global. There's a very, very large global market for farm equipment.
Company has already invested over 250,000 crores for creating state-of-the-art digital infrastructure.
The Karnataka government has decided to waive all defaulted farm loans as of December 31st, 2017.
The government is aiming to mop up an additional 30,000 odd crores in the second quarter itself.
As of now, the frontline indices were moving back into the green. We'd seen a bit of green a little bit earlier on, but that got sold in.
Infosys, Tata Steel, Reliance Industries. RIL will close at 964 and down about 1.33%. So that's a large cap pack for you, 16 lower.
Bull Stutter on Dalal Street as markets end with minor cuts. Sensex slips below 35,600. Nifty sheds 20 points as gains get wiped out in late trade. Infosys, Reliance and Titan drag.
Midcaps continue to tumble with the index losing over 100 points. United Spirits slides over 5% after Karnataka government increases excise on liquor by 4%. Adani Power, PC Jeweler, Graphite India are the other key losers.
Financials and banks outperform in an otherwise downbeat market. HDFC and Yes Bank keep Nifty Bank Index in the green, but PSU banks and many of them actually end in the red, even as the Finance Minister Piyush Goyal meets bankers to finalize the plan to tackle bad loans.
Titan stock slides over 5% after bearish commentary from the management after many quarters. I mean, this is essentially indicating a muted sales growth in the first quarter. Tata Motors also slides 2% after Jaguar and Land Rover warns of a $1 billion hit to the company due to tariffs after Brexit.
Perhaps more likely to be a £1 billion hit because of Brexit. But after telecom, Reliance Jio takes on internet and cable TV providers, announces the launch of Jio Giga Fiber to provide internet and set-top box services. Den Hathway take a beating in trade. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talkback, the show where we tell you about all that happened in the 6 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant.
Lata, hi. Thanks for that. Over the next 30 minutes or so, as Lata pointed out, we will talk about the top 5 market stories. Our guests will answer your stock questions. Joining us now to answer your questions are Deepan Mehta and technical expert Mitesh Thakkar. Gentlemen, thanks very much, both of you, for being with us here on the show. As always, I mean, before we start answering and taking questions from you and posing it to our experts, let's quickly wrap up what happened as far as the day is concerned. Lata.
Well, our flyers, I think our headlines summed up most of what happened. There was an Asian gloom when we started because July 6th is the headline, the deadline when the US-China tit-for-tat tariffs of $34 billion of goods will come into effect. So there was that nervousness kind of started. But, you know, in the end, the Sensex and the Nifty fell more because of perhaps domestic constraints or reasons. Reliance, maybe the hope trade played before the AGM and that saw profit taking. Infosys, like we saw in Tech Mahindra and other stocks, you know, rumors or fears that earnings may not live up to expectations. For whatever reason, those were the 2 big contributors to dragging the Nifty. Actually, minus of Infi and Reliance, it's not been a bad day. It could have even been positive because auto stocks did damn well. But midcaps, really, there were no excuses. Just across the board, there were so many stocks that were falling. Prashant will detail them in a minute, but the big guys who fell were really these high beta guys. IDBI, HEG, PC Jewelers, and a whole host of them that Prashant will tell you in a minute. Private banks were, of course, the island of green in the market. Yes Bank stood out in particular. Probably they were abetted by the Nifty Bank weekly futures expiry, but technicals aside, you know, the private banks like HDFC Bank have been an island of green. It's possible that the markets will be able to break out of that 10,500, 10,800 groove maybe after the results season kicks off next week. But once again, I think stock-wise is very important, especially not just in the mid-caps, but even in the big ones.
Oh, yeah, absolutely. I mean, actually, let's begin with the big ones and let's start with the stock stacks. So RIL, right? I mean, the focus is the market, I mean, during the trading hours was the AGM, that speech, and it lost. I mean, it was off quite a bit. Let's go straight to the stock stacks. It lost quite a bit. Infosys was the other big one, which lost, I mean, a week through the course of the session. By the way, Infi is now down about 7% over the last 2 trading sessions. And then there was ICICI Bank, which also sort of gave way as far as the downside is concerned. Those are the 3 names I'm referring to. Banks were mixed. So State Bank of India, HDFC Bank, Yes Bank. Yes Bank stood out as one of the top gainers, 4% odd on Yes Bank. The other 2, not so much, didn't really go anywhere. You know, what was higher? Lever, ITC, Asian Paints. I mean, unambiguously looking good. Titan, of course, subdued commentary, as the headline suggested, down quite a bit. I mean, actually ended almost at the day's low. I mean, this Titan stock is up 3 times last year and is down about 2% for the year after today's 5.5% cut. So I don't think there's very much to complain about. Cement, I mean, very strong gains. Ultratech, ACC, Dalmia Bharat, India Cement. So large cap, mid cap cement stocks all looking pretty good. And other mid cap movers, First Source, Info Edge, 8K Miles, looking good. I mean, 8K Miles especially big move. The geo impact felt on a variety of stocks. MSOs, Den, Hathaway, City Cable on your screen, big sell-off. And of course, the Karnataka tax hike as far as liquor goes, there was impact on United Spirits. Radico sold off, and something like a GM Breweries was lower in trade as well. Lata.
Okay, that was the disruptive impact of technology that you saw on the MSO stocks. Well, let's find out what our guests have made of the markets. First up, where do we go from here at 10,750? As we've been saying ad nauseum, it's so much within the groove. Mitesh, within the groove, is this a time to sell or buy? What would be the tomorrow trade?
So since Lata, we are within that range, I think, you know, neither a time to buy, neither a time to sell, but trade more stock specific basis. I think that's what we've been advocating. I will just refine the edges which you were mentioning. I think 10,850 and 10,600, 590 are broadly the levels. A closing beyond either of these levels could give some kind of directional push and then, you know, allow us to trade more aggressively on the index. But for the time being, I think with most of the indicators still remaining flat, my sense is that this range might continue, and as you rightly pointed out, till the result starts coming in.
Well, let's hope for a breakdown or a breakout at that time.
Let's move on to the second headline of the day then, and this is mid-caps. Mid-caps continue to tumble with the index losing over 100 points. Adani Power, PC Jeweler, Graphite India were the key laggards, but it was the United Spirits stock that took a beating today, all thanks to the Karnataka government proposal to hike excise duty on liquor by 4%. Let's get deeper into this one in terms of the impact, exposure to that market, etc. Sonal Bhutra is now standing by with exactly that. Sonal, over to you.
Well, yes, that's right. Not a good day of trade for the liquor stocks. United Spirits, United Breweries, all these stocks saw huge declines in trade today. Well, that was because the news came in that Karnataka government has increased excise duty on Indian-made liquor by around 4%. And why Karnataka is an important market is because 40% of the revenues for United Spirits come from the markets of Maharashtra and Karnataka. Also for the beer market, one of the largest chunk of revenues coming from Karnataka. It's one of the biggest beer markets in India. But I spoke to a few industry experts and they told me that they were expecting a hike of around 10% in excise duty on liquor, and 4% is lower than the expectations and is in fact a relief for all these companies. It will not have much impact on the earnings of the company. Also, some analysts on street are saying that this hike can be passed on through price hikes to all the customers. So overall, not a big impact on the companies like United Spirits and United Breweries. Back to you.
Okay, well, at least United Spirits had a reason. Or the MSO companies, cable companies had a reason. But a lot of stocks have been falling without let or hindrance, and among them was also PC Jewelers, a stock in which perhaps many people are stuck. So Deepan, I think this question will come your way. Our viewer Keshav Raj has written to us that he has 40 shares of PC Jewelers, which he had purchased at 342 rupees, has been holding for 6 months now. Should he hold or sell? What would you tell him?
So I think it's very difficult to call what is happening in PC Jewelers, and a lot of controversy surrounding the stock on a fundamental basis. Of course, it appears to be extremely cheap, but then a lot of issues relating to the confidence in the stock. So very difficult to give a judgment as to what one should do with PC Jewelers. I think booking such a huge loss also, mentally has its own challenges. But my sense is that any opportunity which comes where the stock goes up maybe 30–40%, and it's a volatile stock, mind you, that trading upswing must be taken advantage of to exit out of PC Jewelers. I am not that confident of the company's prospects going forward. I think it's best to remain with Titan, and the kind of profit warning which the management has given provides an ideal opportunity for a long-term investor to get into Titan with a 3 to 5 year view, given that there could be soft numbers for the June quarter, but the long-term trend remains extremely strong for Titan.
I suppose the gold standard in gold.
There's only one Titan, right? There are so many jewelry stocks, but only one outperformer by far. Well, the third headline today, financials and banks rose in an otherwise downbeat market. HDFC and Yes Bank kept the Nifty Bank Index in the green, but public sector banks ended in the red, even as the Finance Minister, Piyush Goyal, is meeting bankers to finalize plans to tackle bad loans. We've got questions, I think, on ICICI Bank first, Lata.
Yes, sir. That one's continuing to be, weakened. Of course, it has its fair share of problems, but there are a goodish number of people who believe that, with its subsidiaries and with perhaps the uptick in corporate loans, there will be relief for ICICI. But here's the viewer, Samant Desai. He's holding 200 shares of ICICI Bank, purchased at 356 rupees. Has been holding the stock for 3 years now. Should he hold or should he sell? Okay, I would toss this actually to both of you. Let me start with you, Mitesh. What is the stock telling you, the chart?
See, the stock to me appears that it will possibly not do much, still be range. I believe that around these levels, 255, 256 is where the last we saw important, bottom take place from where the rally to 360 started. This was in October 17. So I think around these levels, we have very strong support coming. So maybe, he might want to add more in case he can around 255, 256, I think add more and keep the stop below 240. I think on a bounce back closer to about 300 would be a good exit, and the stock might just be in this range for about a few months to come by.
Okay, we will take a very quick break here. The first,
maybe I want Deepan also to give a view. Deepan, ICICI Bank?
No, not at all. I think our view on ICICI Bank remains negative. And the reason is not just the recent controversy surrounding the stock, but also the fact that there's a great deal of, in terms of underperformance versus its peer group is certainly quite disappointing. So I think ICICI Bank could be avoided. There are better prospects within the private banking space. Go for the best, that is HDFC or IndusInd Bank or even RBL for that matter. I think that would give higher returns over a 2–3 year period than ICICI Bank.
As far as official coverage, sell-side coverage is concerned, it's one of those cases where everybody is now all are saying buy, everybody is sitting tight. It's just about when it'll start to...
And the stock refuses to listen to the analysts.
Well, let's take a quick break here, and we come back and we take more questions. Of course, we've only gotten through a few of the top stories of the day, more coming right up. We leave you with commentary from Sailesh Bhan of Reliance Mutual Fund on what they think about the consumption space and how it is likely to fare in the markets. Listen in.
Other areas of the consumption space, like consumer staples, though are expensive today, but you have consumer discretionary, which is much better place. You have media and entertainment space, which is a part of discretionary, which is again a much better place. Hospitality, which is a decent sector, which is much better placed. So you've got many subcomponents of this sector, and as we analyze it, nearly 30–40% of India's market cap, or 30% of India's market caps, actually just falls into this particular area, which makes the opportunity far more diversified than any other pure single sector product.
With us here on Markets Today Talk Back, absolutely flattish kind of day with large stocks on both sides of the spectrum, up and down. So didn't really go anywhere, the market. We got through 3 of the top 5 headlines that we get to you, which defined the day. Here's the 4th one. This is essentially the focus on laggards. Tata Motors lost ground in trade today. The stock was down 2%. The weak JLR sales in US, coupled with a Financial Times report that a hard Brexit could cost the company more than £1 billion a year in tariffs, weighed on the stock. Titan was also lower. The stock ended over 5% in the red. This came after the management of the company reported muted jewelry sales growth for the first quarter of FY19 due to weak demand and high base. Mangalam is here standing by to wrap out both those things, especially focused on Titan. Mangalam, over to you.
Well, Titan was lower in trade today after the company gave an update on its first quarter performance to the exchanges yesterday post-markets. And the mainstay of the company, the jewelry business, they said that saw a muted performance, and that was on account of two reasons. The first one was there was a weak demand, especially coming in from the adornment segment. And secondly, the high base. Remember, first quarter FY18, we saw preponed sales coming in from GST as well as a one-off, which led to jewelry segment growing at upwards of 50%. 54% is the revenue growth that the company's jewelry segment posted in the first quarter of FY18. So on that high base, along with a muted demand sentiment, the company saw some weak performance in their jewelry business. That is something the street did not like. However, they did not change any guidance for the year going forward and still maintain their long-term guidance. So that is something we'll have to watch out for. Watches business did well, especially both in their traditional as well as e-commerce channels. They've opened 10 Tanishq stores in this quarter. So going forward, that is something we'll have to watch out for. And the street is definitely watching out for this stock, especially after its 16-17% decline from its record high. Now it trades at 35 times FY20 earnings. So let's see what happens to Titan going forward from here.
Yes, thank you very much for that, Mangalam. One thought that after the sale by Rakesh Jhunjhunwala, the overhang was done and it was bouncing from its 200-day moving average. But today's news took it lower. Other people seem to have the same questions. Rupesh Kulkarni is holding 5,000 shares of Titan, which he had purchased at 650 rupees. I shouldn't be complaining. He's been holding it for a year. He's a short-term investor. Should he hold or should he sell? Well, short term, so I'll ask first Mitesh, what should he do?
Lata, I think the stock has clearly got into a corrective mode after that big sell-off and the news, but also the fact that technically the stock has kind of, taken a breather from its uptrend. I think the stock will head towards levels of around 790, which is a very good medium-term support area. So give and take 5 rupees. I would suggest he hold the stock with a stop loss just below 790, 785, 780 could be a good level. And I think, on a bounce back, I think try to exit the stock closer to about levels of 930, 950. I think the stock will possibly now go into a long consolidation, having run up from levels of 300 to about 950 in a year. I think clearly that the signs of signals of an uptrend are over, but the best we can hope for is a bounce back from that big support coming in at about 790, 95 zones.
Okay, and Deepan, you just spoke well of that stock, but 1,000 has been a near-term high.
Yeah, I know, and it may be difficult to cross that figure at least in the next couple of quarters or so. But do keep in mind that we are seeing a decent upswing in consumer spending, and if the monsoons are good, then we generally have a good wedding season, and wedding season tends to benefit Titan, considering that they are now having offerings over there as well. And what we are seeing is minor downswing traditionally in a stock where there's a secular growth phase. So I don't think there's much to worry about. In fact, if you missed out on buying on Titan in the earlier quarters or years when the stock was just moving one way up, this period where there could be a underperformance is a good opportunity to get into Titan. And I think there's somewhat a margin of safety considering the kind of correction which has taken place. Valuations also have come off a little bit from the highs that they were quoting at earlier. So we remain positive on the long-term story as far as Titan is concerned. And it's good that the management is guiding towards a soft quarter for the June quarter. And it kind of pairs the expectation which is there in the stock, which is quite nice. I think it's well received and I think more broadly discounted as well.
Okay, so that is Titan. We've got a question on Tata Motors. Rajesh wants to buy 50 shares of Tata Motors and he wants to know when is the good time to do it. I mean, the stock is down 40% this year. 263, it's almost at the Feb 2016 lows. Deepan, what would you tell him?
I would advise him against buying Tata Motors, considering all the uncertainties surrounding JLR and Brexit, and also the fact that the capital expenditure plan of JLR was not very well received by investors, and does show that there is intense competition in the segments that it is operating in, which is why it is required to spend additionally on new models and on new factories and so on and so forth. So I would like to avoid Tata Motors at this point of time. No doubt domestic operations are looking up, but then I think GLR is such a large portion of Tata Motors valuation and consolidated P&L balance sheet that what happens in GLR in fact dictates the stock price of Tata Motors. I think there are far better choices in the auto industry, which is a great area for investment from an investor's perspective, and one should certainly look at stocks like say Maruti or Eicher Motors or even a TVS Motors. I think would offer a higher return over a medium to long term than Tata Motors.
Fair point. Can't argue with that. Well, let's go to the fifth headline and the last headline. But the most important, Reliance Industries made a big splash at its 41st annual general meeting. It announced the launch of broadband services business called Giga Fiber, and a higher-end feature phone called JioPhone 2, costing about 2,999. Stocks of broadband players like Hathway Cable, Den Networks and Dish TV significantly lower on the back of that announcement because now this Giga Fiber enters the home and becomes a means to start your television channels. Well, first let's listen to what the big man from Reliance Chairman Mukesh Ambani had to say at the AGM.
The company has already invested over 250,000 crores for creating state-of-the-art digital infrastructure to provide mobile and broadband connectivity across the country with the largest fiber footprint. We will now extend this fiber connectivity to homes, merchants, small and medium enterprises and large enterprises simultaneously across 1,100 cities to offer the most advanced fiber-based broadband connectivity solutions. We are calling this fiber-based broadband service the Jio Giga Fiber. Starting this Independence Day, August 15th, you can start registering your interest for Jio Giga Fiber through both MyJio and Jio.com. We will prioritize our Jio Giga Fiber rollout to those localities from where we receive the highest number of registrations. Jio Giga Fiber will be the largest greenfield fixed-line broadband rollout anywhere in the world, with rollout happening in 1,100 cities of India simultaneously.
Okay, usual disclosures. Reliance Industries owns Network 18 and TV 18, the companies which operate CNBC TV 18. And RIL, of course, which is the promoter of RailJio, also owns and controls Network 18, which owns CNBC TV 18. Well, with that, we go to the questions.
Oh, yeah. So Kuldeep Vora has got 3,300 shares of Reliance. His cost is 830 rupees each. He's been holding the stock for the last 2 years and wants to know whether he should hold or sell. Mitesh, your reaction first?
I think if the time horizon is large enough, I would clearly suggest hold. I think, the stock has now on multiple occasions peaked out around this 1,015.20 to about 1,030 on the upside, but eventually a breakout will happen. The stock has been broadly doing a range of about 900 to about 1,020.30, and once it breaks on the upside, because the long-term indicator is still pointing up, I suspect this stock should get past 1,100 very soon and possibly even make a higher level. So I would definitely advise a hold.
All right. Actually, we don't have the time to go to Deepan, so that question on another day. Deepan and Mitesh, thank you very much for joining us, and all of you on Markets Today Talkback.